Hello and welcome to the show. You've joined us on the second season of Future of Global Trade, and probably it's the opportune time to discuss the resurgent India and also the bilateral trade opportunities that are expected to emerge. And to discuss exactly that, we have a special guest lineup. Let me start by introducing them to you. We have with us Simon Constantinides, who's the Asia Pacific Head for Global Trades at HSBC. We have with us Alok Shivsagar, who's a director at McKinsey. K. Suryanarayan, who's the VP Finance at Godrej Consumer Products. And also with us, Rupesh Mastakar, who's the country treasurer at KDB India. Gentlemen, so good to have you on the show. And my first question goes to Simon. Simon, you look at the Asia-Pac region for HSBC. Tell us, after the new decisive government which has come into place in India, has the sentiment really changed? Is there a timeline set and a perception change when the outside world looks at us?
Oh, I think that's very much the case. India's been very much more of a domestic economy, and now this is an opportunity, I think, for India really to get onto the world stage, compete greatly with China, because the opportunities are going to now happen if they do come forthcoming is quite exciting. I think starting with infrastructure, which is obviously a desperate need for the country. We've heard an awful lot of positive statements and sentiments about the priority of that. But at the same time, I think if you look at India Inc. and the phenomenal diversity of many outbound industries, from pharmaceutical to engineering, there's some fantastic opportunities. So I think the general sentiment is this is very exciting.
All right, very exciting. Let me come to Surya then. You come from a space which has never seen a lull, so to say, because the consumer story, the consumption story had been intact. But do you see enough headroom of growth? How do you foresee the coming economic revival that we are going to see? And with the Indian middle class aspiration also going up, is that also going to facilitate a large part of global trade?
Well, surely yes. For the next few quarters could be that we could see some bit of low sentiments, but we would wait for probably the government to really take off, start taking decisions. Monsoon does play a great impact on the Indian economy. We will need to wait and watch how that spears out in the next few months, and we're sure to see a lot of growth coming in for an FMCG sector.
All right, Rupesh, your sector is a tough one, but then the government has, I think, pinpointed that this is one sector which needs a lot of upliftment. You do a lot of exports. How do you see this whole area panning out?
Well, in fact, if I have seen the last couple of quarters, and also when we look into the future, I mean, the opportunities always existed, right? I mean, there were opportunities to export quite a lot of engineering goods out of the country, as well as there was a lull in the local demand, but we feel that the local demand will get a boost as a couple of quarters go by. But coming back to your question on exports, in fact, there are big opportunities, right? I mean, especially in the neighboring countries which need engineering goods specifically for the automation businesses, or for the power segment or the infra segment, right? So there are opportunities, and we need to grab them.
All right, we need to grab the opportunities. And Alok, tell us from your side, and you get an overview of all the sectors, geographies, how things are developing. What are your clients telling you? How are you reading into some of the sectors which has a lot of headroom for growth going forward?
So I think firstly I agree with the panelists that there's actually a tremendous sentiment in favor of India, and we see this coming from multiple sectors in our own client base. We see this in certain trade corridors, so a number of Japanese companies that we're working with significantly increasing their investments and commitments into India. We see this in the context of aerospace and defense investors looking at not just the FDI in defense, but also the entire ecosystem and supply chain associated with that. We see that increasingly also in various of the consumer sectors. So I actually think of this as a very important opportunity for the country, both with respect to sectors like the ones I talked about, but also trade corridors, because actually there will be an opportunity in the Japan-India corridor. There actually will be an opportunity in China-India, given how the politics are working through as well. And in addition, there's of course the US-India.
Simon, how is that regional trade corridor and the China factor, the way the government has made its first moves, going to impact the global trade scenario?
I think one has to look at the shift that we're seeing across the region. We're seeing a certain movement in China and other markets up the value chain. So where we originally used to think of China as the low-cost manufacturing market, it isn't. And as China's moved a significant percentage of its population into the middle class, that creates new demands for consumer products, healthcare, education, services, and better infrastructure. They've actually got to adjust their manufacturing sector. So that's going to actually push a move of some of the lower cost manufacturing, the low value add, into other markets, and other countries in Asia will be the beneficiary of it. But at the same time, as China adopts to more of a consumer-driven market, a more domestic-driven market, and we see imports overtaking exports in the foreseeable future, that's going to create a lot of demand for value-add products, technology, et cetera, et cetera. And so the fantastic opportunities between these two giant populations that are very, very close together, sitting in the heart of global trade, really, if you think about it.
Alok, you want to come on that one? Services versus manufacturing, exports, trade corridors, all right. But in which segment? So services we seem to be doing much better. Have we missed the bus in manufacturing?
I think there's no question that we have missed the bus on manufacturing, but equally there's no question that we must fix our manufacturing issues. I mean, as you all know, we need 1 million new jobs per month in order to fulfill, our demographic requirements, right? So 1 million new jobs per month in high value added items is not going to come from, just services alone, right? My suggestion would be that if we take a very laser focused approach to saying, where are there natural places in which to build manufacturing, where either it's a China plus one, it fits in with our skill sets. Many cases, manufacturing and services are blurring because of the computational or digitization of many of these products themselves, so on and so forth. We can then build a very different type of manufacturing footprint, relevant to India and relevant to the job requirements.
All right, what that relevance could be, and which are the new sectors that we can explore, and which are the new trade corridors which can develop for India going forward? We are going to discuss just that when we return from this short break. Welcome back. You're watching a special edition on the future of global trade in India and Resurgent India, and what are the big opportunities that we could be capturing going forward. So, we are coming to you then. What has been your experience when it comes to importing raw materials and going forward with your exports and also your global footprint?
Well, the last 1 year surely has seen a quite volatile situation in most of the emerging markets. It's very similar in countries like Africa, Indonesia, where we have seen the currency really being quite volatile. In India, for example, yes, the rupee was quite volatile in the last 1 year. We have seen it at various levels over the last few months, though there has been some stability. We expect with a good government in place and with specific reforms and specific goals of the government, we expect the rupee to be quite stable, and we don't expect too much of flux in the currency itself. Overall, on the import side, we see even the local products getting quite competitive as compared to imported items. So there's a good amount of curtailment of import if possible. And exports surely have grown. In fact, for any exporting country, a rupee depreciation is always is highly beneficial, but we look to gain on both fronts.
Which are the countries that you trade with?
Well, we have operations in about close to a dozen countries, in Indonesia, in Africa, in Latin America, in Dubai, in UK. We also export a lot of our goods to various other non entities where we are not present. So it's a combination of both.
All right. Simon, talk to us about the Japanese trade corridor. And Japan and India has worked together on various fields. Now we are looking at a lot of infrastructure development with the help of the cash rich and the deep pockets that Japanese companies have. How much have we explored and how much headroom do we still have?
I think there's a lot of headroom, and I think it's actually a very important area of focus. But it's not just Japan, it's also Korea. Korea has a very, very strong outbound infrastructure program. And I think if you look at China, and if you look at the developed markets throughout Asia, one thing is quite common. Its infrastructure is solid, and it's of high quality. And you have, if you look at Hong Kong, Singapore, Australia, Japan, Korea, these are all countries with very good, solid infrastructure. And the quality of the infrastructure has to be there too. It has to be stable. One reason is you can't have it breaking down in 10 years' time because the cost to maintain it is a huge challenge. The US is finding that now with a lot of its aging infrastructure. And I think if you bring in the technology of established businesses and established markets, you'll learn from that. Right. And so a protectionist movement is not positive because it doesn't have a long-term benefit. But having an open trade policy, understanding the market environments of your trading partners, understanding the cultures, that opens up future opportunities between the two markets. And I think through cooperation, through collaboration, through positive actions, it's always much more beneficial than taking a closed-minded approach.
We have a live example of technology being imported, like ABB gets it from its parent company. And do you think that this particular growth will happen more when economic revival happens, with more and more companies bringing in their technology in India, will head towards the Indian shores for more business there?
Well, absolutely. I mean, I agree with what you are saying. You know, if India is in the position to get the right technology from the offshore home markets of most of the MNC companies, and then we bring it to India, and then we are in a way well positioned to add certain value to that technology and then sell it in the domestic market or let's say export, I think Indian economy is very well positioned to benefit out of this.
But Alok, come on this. You have written exhaustively on how MNCs can be in a winning position in India, how they can enter. But in the recent past, we have seen that there is a little bit of trust deficit when it comes to Indian shareholders with regard to the MNC firms who want to either increase the royalty rates or increase their shareholding in the Indian listed companies. What is it that they can do so that they can take full benefit from the Indian shores as well? But on the other hand, the trade corridor is intact. But on the other hand, the Indians are also protected and there is a balanced growth and an inclusive growth.
So I think firstly, I think it's important to not paint all of the companies with the same brush, right? There are very successful MNC companies here. By the way, not all of them are with US or European origin. Many of them, as Simon says, are actually of Korean origin or Japanese origin. So I think the first important statement is we shouldn't treat them all as MNCs. These are global companies. They have their specific skill sets, mindsets, as well as management capabilities. The second theme I'd say is, and I've talked about this a lot as you pointed out in various articles, is this is not so much about the theory of India, but the execution of the opportunity. And when you look at, in our own work, the gap between MNCs in the same sector, you often have a 50-60% gap on ROE, on return on assets, on margins, in the same sector with the same set of products, driven by how they run their business, right? And too many MNCs often get sort of seduced by, high-level statements or theories about India, but haven't got down to saying which local markets, how do I customize the product, how do I create a more empowered local management team, deal with Indian shareholders in a way that's useful and collaborative and not confrontational, and then design a business model that works in India for India, and from there you can export as well. But I feel that those that have been successful, and as I said, there's almost a 50% gap between those that are not and those who are, have really put in place 7 or 8 of the right execution capabilities. And those are the ones that are actually benefiting from India and have actually got very supportive shareholders as well.
Surya, come on this. How do you see the entire scenario developing on the government's policy front? Because FDI in defense is something that they spelt out that is at a proposal state, but FDI in multi-brand retail, they have been dilly-dallying on. Is there too much uncertainty and not so much continuity when it comes to policy? And what do you think are the certain steps that the government can take to welcome the MNCs and welcome the trade corridors?
Well, surely it's good to have FDI come in various important sectors. My personal view on retail would be it's something that can wait for the country today. It's more important to concentrate on infra, power, agri, and also probably even the internal networking of the rivers. That's something that's really going to be good for the country. From what I would expect would be limit the bureaucracy in any investments that is coming in, ensure that decisions that have been taken stand till the test of time rather than just keep changing, and there should not be anything on a retrospective nature which will hamper any business decisions that come in. For us especially, we are more an Indian MNC who wishes to invest overseas, and that's something which I would surely like the government to look at differently, because it's not only that Indian companies look at India alone, but we are also growing overseas, and today almost 40% of our top lines come in from the overseas operations.
That's a very important point that has been noted, because Simon, it's not just about the Indian government opening the doors for the outside world, but also supporting the Indian companies enough to have footprint outside and push. A lot of quid pro quo is required when it comes to global trade. I was told that to push mango exports to the US, Harley Davidson had to be imported, and those kind of scenarios have to be developed. How much do you think a decisive government plays a role in such trade corridors?
Governments have a role, but they also have to respond to the private sector. And they have to respond to those who are leading the industrial growth to say, what can we do to help you to facilitate? And I believe that the more the government is hands-on, it actually prevents the entrepreneurs, the promoters from really those who've created jobs, created wealth, created innovation, created sustainable, successful businesses from going out and doing more. And I think the challenge is there are so many free trade agreements, but what research has recently shown through some work we've been involved in is a lot of them aren't effective. And a lot of people, companies don't understand how they take advantage of them. And I think government has to keep it fairly simple, but really be there to support what the business environment wants them to do, versus saying you must do.
Right. So that's what corporate India, corporate world really wants, is a decisive and a supportive government. But government apart, there are various other factors which are going to really chart the course for bilateral trades for India going forward. We'll discuss that when we come back after this short break. Welcome back. We are discussing the future global trade for India. And Alok, tell us about the ease of doing business. That has been the much talked about topic for the MNCs, for the domestic companies. Now, how do you see that? Is that going to change with economic revival as well?
I think there's no question that this is a big opportunity for the country. And we all know where we stand in the global indices, so we don't need to repeat that. But when we talk about ease of doing business, there are multiple components of this, right? And we should be careful to, number one, address it both at a center and at a state and at a local level, because all of these three things need to work together in order to actually make something happen on the ground. And often we get stuck at one of these levels. So I think there's a component around the predictability of policy, with respect to tax, approvals, so on and so forth. Then there's the predictability of the policy as it relates to investments in factories, infrastructure, labor, and then there's the predictability of the policies with respect to managing your infrastructure, your logistics, your freight corridors, so on and so forth.
A semblance of all of that is being seen in the new government from whatever little they have managed to do. But budget will be one of the deciding factors. A lot depends on that as well. And the other deciding factor obviously is the tax issue, policy framework and the certainty regarding that. But rupee has played a huge role when it comes to imports, export. As somebody who exports, who depends on a large part of revenues for exports as well, how has rupee played and how much of the volatility of rupee has been a spoil spot?
Well, I mean, lately we have seen rupee being stable in a corridor of around a 59 to a 60 level, right? But is that really the true value of the or the fair value of the rupee? The answer is no. When we do a further analysis of that, you can it was told that the fair value of rupee is between 61 and 62, and that is something that the current RBI governor as well as the government would be trying to manage the rupee in that range between a 59.50 to a 62 level, which would make the Indian exports fairly competitive in the other markets and at the same time make the investments cheaper. I mean, it will make the investments fairly competitive to come to the country as well.
What do you think the government should do to strike a balance between the global trades and imports and also facilitating the domestic companies so that they don't feel slighted?
I think for India, we have two main assets. One is our labor and the other is technology. And if we are able to work on these two strong assets, we can export a lot of our technology, and which is what we in Godrej also do into various other geographies. We always welcome competition within. It helps us deliver that particular edge, and as Alok said it rightly, maybe have competition within states, but also have competition within the companies and the organizations that are there within the country and overseas. Today it's just not a regional market, it's a global market. So you don't only fight in India, you fight them across the world everywhere.
All right, Simon, another important factor is the WTO talks, which don't find a headway most of the times, the free trade agreements. How are these panning out and how much of an impact will this have on the future of global trade in India?
Well, you actually just said it quite rightly. The WTO is a lot of talk. And I think the general sentiment over the last round is hopeful, but no one's really pinning their hopes on it. What is actually taking place is very similar to what Alok was talking about on the domestic side, and that is a greater movement to say we need to have a focus of trade facilitation. And what trade facilitation about is you can manufacture something or you can desire to import something. Getting it through the borders, getting it from point A to point B is an incredible wasted expense. And it can actually eat up billions and does, billions and billions of dollars of wasted GDP. And the biggest thing, instead of saying, well, we can export this, if we import that, is not as important as saying, when we do something, let's reduce tariffs. Let's reduce protectionist barriers in terms of the paperwork and stuff like that. A company I was talking to recently had to bring a product back from one market into China to have it fixed. It was exported from China. It took 2 weeks to get it from the Hong Kong border into Shenzhen, where the factory was, because of the paperwork. That's wasted time. It's not productive. It costs money, adds no value. So I think the WTO should take a stronger look at trade facilitation to make it easier that when you can ship, to get it through, and to actually help accelerate supplying what is demanded. And that actually is the most important thing. So restrictive barriers have never been positive. They've never helped anybody. But this is something. It's taking baby steps. And this is a good first step, and there's a lot more interest in actually really addressing this now. And that will be important for India too, to be part of that.
Alok, India to go out and lots of things are to develop. What's the kind of timeline that you're expecting? And with your kind of exposure, which is one sector and geographical corridor that you would place your bet on?
So I think firstly, Nisha, I completely endorse what Simon said. This is our time. This is India's time. We've got to grab it. It's a use it or lose it time for us. And that's why, given our size and scope, I don't think it's only about one sector, one corridor. As I talked about earlier, I think there's tremendous opportunity in the Japan-India, US-India, German-India, China-India corridors. There's actually a lot of opportunity for us in Africa. We're doing a lot of work to help companies capture the opportunities. But I do want to emphasize this theme around capturing the opportunities, because it's too much talk, right? And it really has to be around execution. And as I talked about earlier, there's a wide variation already, whether you look at Indian companies going overseas or multinationals in India, between how people execute. And we, at least at McKinsey, are spending a lot of time helping our clients build those execution capabilities. And therefore, same is true on the government side, right? So to your point, right, it's a lot of this is about speed and scale and simplicity, terrific themes, but needs to get done.
I totally agree with you that execution has been one of the challenges that India has been facing, but that's why probably a decisive government is put in place for, and we all are euphoric. Let's see how this euphoria is going to sustain, but the House is united over here that economic revival is expected to happen, and there could be hectic activity when it comes to trade corridors by India. Thank you, gentlemen, for your views and joining us, and thanks so much to our viewers.